Hello and welcome to my academy. पढ़ेगा इंडिया, आगे बढ़ेगा इंडिया. I am Shubham Dubey, your educator for economics, and today I will teach you the lecture Reserve Bank of India and its functions. In Reserve Bank of India, first I'll tell you about the historical background of Reserve Bank of India, and then I'll discuss the functions of Reserve Bank of India with you. Before that, I want to draw your attention towards the importance of economics. So let's start. We all know from UPSC point of view that economics is a very important subject, as it gives you at least 15 to 20 questions in your prelims examinations, and in mains you will get at least 7 to 8 questions from economics or associated with it. So that makes it a very important topic as well as subject for your examination. Along with it, we can see government is doing policy making, and that policy making requires economics. So holistically, economics is a very important subject for you, and I'll make economics very easy for you. So today I'll be dealing with Reserve Bank of India and its functions. So let's start. So I'll start with basics of Reserve Bank of India, that is the historical background. So when I'll start with the historical background, you must know that Reserve Bank of India was an institution which was established in pre-independence India. It was established in the year 1935 as a venture of private sector with a capital of 5 crore rupees. The act was RBI Act 1934, which is still prevalent under the Government's Act, and this RBI Act makes and gives power to RBI to govern the banks to do all the financial activities in the market at the same time. The main recommendation was done by Hilton Young Committee, and this recommendation requires so many things which has been included in the RBI Act 1934. Further, it was nationalized in the year 1949, that was 1st of January, and initially it was headquartered at Calcutta but shifted to Mumbai. So currently the headquarters is at Mumbai with different sub headquarters or offices of RBI in different capital cities of India. The current governor is Mr. Shaktikant Das, who is 25th in number, and his term of service is 3 years. Apart from it, there are 4 deputy governors, and all are appointed by the central government. You must know the appointment of RBI governor is done by a selection committee under the central government. The financial year is 31st July to 30th of June. Why I am giving you this much of information? Because in different examinations you will find there are so many points which are given here are very important. In few examinations, they have asked what is the financial year for Reserve Bank of India. Why it is not 1st of April to 31st of March? It is not because the entire financial year activity is being compiled by RBI under its RBI bulletin, which is being published on 31st of July to 30th of June. So that's why their financial is different from the financial year of Government of India. Now let's go to the another slide, which is having the functions of RBI. So let's start with functions of RBI. Why RBI was made, and what are the basic functions of RBI that we must know. These functions include the RBI being the monetary authority and issuer of currency. It is bankers of banks, lender of last resort. It is regulator and supervisor of financial system. I'll tell you everything in brief that will make you to understand the basic functions of RBI. So let's start with the first. Issuer of currency and monetary authority. The currency which is in your pocket, the denomination of notes 2000, 500, 100, 200, 50 rupees are being issued by RBI under the minimum reserve system of RBI, which holds that RBI has to keep 200 crore rupees in the form of either gold or foreign security. Many a times there have been asked what is MRS system of RBI and how it works. In India, RBI is the supreme monetary authority which gives its organizations the order to issue, to print the currency at the same time. Apart from it, the coins, which are different. The coins are regulated by governments under the Coinage Act and are minted by RBI and its organizations, but the whole authority is with the government. And just to make that government is supreme in terms of monetary authority, the publishing, the issuance of ₹1 rupee note is with the government, not with the RBI. Let's go back to the another functions of RBI, that is government's bank and debt manager. What does this mean? What does government's bank means? Whenever government needs money to finance its deficits, mind my term, finance its deficits, or to make some policies, government needs money or financial support, government goes to RBI for this. And RBI become as an mediator or direct help to the government through different operations. RBI can lend money to the government against the government securities through different measures via banks, and at the same time it is also the debt manager of government. The next point is it is bankers of bank and lender of last resort. What does these two means? You might have heard many banks get the license from RBI. So RBI is somebody who is giving license to bank, not only license but also it gives money to bank whenever it is required. It gives finances to bank whenever it is required. Bank also keeps its money with RBI under CRR. What is CRR? CRR is a cash reserves ratio which banks keeps with RBI, and the whole sole purpose of this cash reserve ratio is credit control. There is no other purpose. Banks doesn't get any kind of interest on that, and at the same time this is for the security of the investors or the common public which deposits its money with the bank. Now let's come back to the another point, lender of last resort. Whenever bank needs money, and even if other channels have been exhausted by the banks, bank goes to RBI and RBI becomes its lender of last resort. This is a question in UPSC examination. It has been asked earlier. RBI, all the banks have accounts with RBI. They have their certain reserves. They maintain their own reserves in the form of CRR, SLR and others. At the same time, the interbank liabilities are cleared by RBI. Now, you may also ask, what is interbank liabilities? You might have heard about the systems like check, withdrawal through different ATMs. You go to bank B's ATM and you are having account in bank A ATM. So you have withdrawn it from bank B, and now the interbank liabilities will be cleared under RBI's guidelines and through RBI's channels. Let's come back to the another one, that is regulator and supervisor of financial system. What does this mean? RBI regulates the entire financial system through its different organizations, institutions, and by itself as well, with its RBI Act, with other banking regulation acts, and with other acts as well at the same time. So all the type of financial systems or payment systems like demand draft, check, RTGS, NEFT, different payment gateways like Visa, RuPay and other gateways, UPI based payments, etc. are regulated and supervised by RBI and its channels like NPCI, National Payment Corporation of India. All bank liabilities and other things are being regulated and supervised by RBI. At the same time, RBI also suggests and advises banks on different financial measures, different financial policies, and for a proper supply of money in the market. Now, let's summarize it. It is issuer of currency, monetary authority, it is bankers of bank, it is lender of last resort, and it is regulator and supervisor of financial system. Let's go back to the next slide. Custodian of forests. There is Always a news regarding the custodian of forex. What does forex means? First of all, you must know it is foreign exchange. Foreign exchange means the reserve of foreign currency, which is being reserved for different measures. The India's forex is regulated, is under the custody of RBI. You might have seen different channels like Western Union and other organizations who are exchanging the currencies for the foreigners, for Indian public who are visiting foreign, for better transactions. Now another point is credit controller. This is the most important functions of RBI. Why? Because you might have heard about Monetary Policy Committee, that RBI is increasing the repo rate, or RBI is decreasing the repo rate, or RBI is maintained it at the same last level or last quarter. Currently the repo rate is 6.50%, and the word repo means repurchase option. Everything I will deal in separate classes, so just don't worry about these terms. These terms are really important from your examination point of view and for better understanding of Indian economy and economic concepts. So let's come back to this. It regulates the money supply through monetary policy. We talk about the monetary system and the regulation of money supply. What is money supply then? Money supply is nothing, the money held with public for expenditure, and plus the loans taken by the banks, given by the banks to the public at the same time. These money should be regulated, and why it should be regulated? Because of two contexts. First context is for inflation targeting, and another is, you can also say, versus economic stimulation or growth. These are two different things which is based on the money supply. If we increase the money supply in the market, it leads to the economic stimulation. Why? Because the investment may increase, the demand will increase because people are having more money in their pockets. And at the same time, if we want to target the inflation, what we'll do, we'll decrease the money supply. So all these steps are being taken by RBI through their direct and indirect policies or indirect rates, or the quantitative and qualitative measures that we'll deal in the coming lecture. Now let's come back to the another function. It works as an exchange management and stabilization of rate of exchange. So many news comes today. One news is that rupee got stronger by 31 paisa, and the current exchange rate is around 81 point something, 81 rupees point something is there. What does this mean, and how this is being stabilized? Sometimes you see rupee fall by 31 paisa or 30 paisa and rupee got weakened. All these are market driven items based on the prices in the world market, like the prices of crude oil, the prices of food grains and other things, which rises or goes down, and it affects the entire monetary system. For that, RBI sometimes do some management as a stabilization management, and at the same time it also do exchange management, so that the rupee doesn't fall so much, it gets some stabilization. Because if it won't get the stabilization, the economy will have adverse effects. All these will be discussed in further classes. Now the another part is the developmental goals and representative of GOI. RBI has its own developmental goals. RBI has some goals. The first and foremost goal is inflation targeting. I am not telling you the developmental goals. I am just telling all the functions. Inflation targeting. Apart from inflation targeting, if we talk about the developmental goals, you might have heard financial inclusion. RBI takes steps for financial inclusion. It gives license to banks. It helps at the same time for the better functioning of banks. It advises the government of India on different financial matters if asked for. It also helps for the economic growth through its different monetary policy measures, not directly but indirectly at the same time. How it becomes the representative of Government of India? If you know, at the different world forums like WEF, IMF and World Bank, RBI represents the Government of India. So there it becomes the representative of Government of India, or it represents as a Government of India. So now let's summarize this also. It is custodian of Forex. Its work is as a credit controller. Then exchange management is also there as a part, and stabilization of rate of exchange. And it has different developmental goals and representative of Government of India. Now, let's come back to the monetary policy of India. This lecture I will be dealing in the coming slide, but I'll give you a basic idea of the monetary policy of RBI as its functions. So, monetary policy of India. Before knowing the monetary policy, let's do the regulation of money supply. What is monetary policy? Monetary policy is nothing but the regulation of money supply is known as the monetary system or monetary policy. How RBI regulates, we'll be knowing in this slide. So, what is money supply? That I have told you in the previous slide. It is nothing but the money held with the public, and the bank loans, which is taken by the public for their different purposes. It can include the individual personal loan, it can include the home loans and other loans. Whatever the money which is circulated in the market, which is in the market cycle, is known as money supply. The money kept with the bank won't be termed as money supply except the loans given by the bank. What are the primary objectives or prime objectives of monetary policy that you must know? The first and foremost is inflation targeting. Then stimulating economic growth, stabilization of the exchange rate and reduction of poverty. You must know all these four are the important and prime objectives of the monetary policy, and this can be asked in your examination at the same time. But there is a very small and minute difference. You know about inflation. What inflation is? Inflation is nothing but persistent increase in the prices of goods and services in a market in a given period of time. If we talk about economic growth, so if there will be a growth, that means people will have more money, and when people will have more money, the demand will also increase at the same time. When the demand will increase, what will happen? People will buy more goods. So when there is more demand, it may induce some sort of inflation. Now, आपने बहुत सारी न्यूज़ सुनी होगी. You have heard a lot of news regarding this, that RBI has kept it now the CPI, that is cost consumer price index. This consumer price index, or in Hindi if we talk, the khudra महंगाई दर, has been kept in between the target of 4 plus minus 2 now in this quarter. So what is this 4 plus minus 2? The inflation rate should be kept in a bracket of 4 plus minus 2, which is decided between the government and RBI and the RBI's framework of monetary policy. Now, certain sort of inflation, why I am taking these points and these issues against you, in front of you, the reason behind this is that certain level of inflation is good for economy because it shows economic growth. if this will be at a higher side, it will give some adverse effect on economy. How? For say if there is inflation rate of 8%, that means people will have less money to spend. How? Because goods will be dearer. Goods महंगे हो जाएंगे at the same time. So what this will do? This will decrease the demand. Then if demand is decreased, production will also be decreased. At the same time, the economic growth will also decrease. So here RBI works in a dual manner, and the two things will be taken care of. One is inflation targeting, at the same time the another is stimulating the economic growth. So RBI makes a balance between the two, gets a flexibility through its monetary framework to make inflation in between 4 plus minus 2 bracket. Now there are two types of monetary policy. One is cheap or expansionary monetary policy, and another is dear or contractionary monetary policy. जब कोई भी चीज़ अपने को प्यारी हो जाती है तो हम उसको संभाल के रखते हैं. So here money becomes very dear to you at the same time. So at that time you will expend less. There is a monetary policy which is known as contractionary monetary policy. When goods are cheaper, you spend more. You spend more. Why? Because you buy more at the same time. So I'll give you a very small idea about these two monetary policy and when these are used. This MS stands for money supply. For say there is huge inflation in the market, what RBI will do is RBI will decrease the money supply from the market through its banking channels. How it will do, that will deal in our next class. RBI will decrease the money supply. What it will do? It will decrease the demand. And when it will decrease the demand, the prices of goods or services will also come down in certain period of time. And when the prices will come down, the inflation targeting will be done. When this inflation targeting will be done, so this type of monetary policy is called as contractionary monetary policy. Now, the another monetary policy, what RBI do is, the major aim of RBI is to increase the economic growth. To increase the economic growth, what RBI will do? RBI will infuse the money with the banks so that they can lend more, so that they can lend at a cheaper rate at the same time. When they will lend more, people will have more money with different sections. For say koi labor hai, they are working on some infrastructure side, they will get more money. And when they will get more money, at the same time they will have more jobs, they will have more demand. And further the cycle will be a better cycle and the economic activity will increase, and this economic activity, when it will increase the economic growth in the economy. This type of policy is your cheap or expansionary monetary policy. This बहुत ही simple है economics. Expansionary, when you expand. Contractionary, when you contract. So जब आप money supply को ज़्यादा करोगे तो it will be expansionary, it will give more demand in the society and it will lead to more economic activities at the same time. And the tools which are being used are qualitative and quantitative. The qualitative tools are indirect tools which RBI use at different purposes at different stages, and at the same time RBI uses quantitative tools which have some kind of direct interference and at the same time indirect interference on the economy. So let's summarize this again. Monetary policy of India is nothing but regulation of money supply. This regulation of money supply is being done by the RBI. And what is money supply? Money supply is money held with the public and bank loans. What is the primary objectives? The primary objective include 4 objectives. First is inflation targeting, then stimulating economic growth, stabilization of exchange rate, reduction of poverty. There are 2 types of monetary policy, cheap or expansionary monetary policy and dear or contractionary monetary policy. The tools are quantitative tools and qualitative tools. So this is it for today. I hope the lecture was very useful to you. Please do ask your questions in the comment box. I will reply you. Subscribe us, like us, and get contacted with the candidate students as well and get the benefit of this. Thank you so much.